Hello, everybody, and welcome to the Plus Three Futures and Commodities Show. We are recording at 3 p.m. East Coast time on Friday, the 10th of May. And on today's show, we're going to look for answers to the major questions in the risk markets right now. Are we going to make lower highs or are we going to go on and make higher highs? That, along with the grain train, keeps rolling. Where's the next stop? And do we want to jump on or do we want to jump off? That all on today's show. My name is Ben Maldonado, and as always, I'm here with my partner Barry Hederachi. Barry, how we doing?
Doing great, doing great.
Without any further delay, Barry, let's jump in because we got a lot of ground to cover this week. We're in such a critical time. We got time counts, we got cycles, we got ABCs, we got Gartleys, we got, geometry square. Everything's hitting.
We got trains, we got planes.
What are we gonna do? In a perfect example, here's your E-mini.
Yeah.
We're sitting here. We made the ABC. We pushed beyond it. And now we're going to be, are we going to get stuck below the 144? Or are we going to go make new highs?
Right. So let's tear it down.
Take them one at a time.
Yeah, let's take it one at a time. Going back to the cash chart, this is the chart that basically called out the high. So looking at that again, we had this, we talked about the 3/8 and the whole move and all of that kind of, got blown away because the market kept crawling higher. Fair enough. That's what markets do. And we're just trying to see where we might get a reversal. We kind of sort of got one here, but it really didn't confirm. And we're just waiting to see. Really, the next stop, we have two options, right? Are we going to get above and run, or are we going to still turn at some point? So I think we still have one more shot for the market to show us its hand, and that would be to do a false break up here. And that's always a possibility. And the market does it often. So let's take a look at that. So that's one possibility.
And often prior to big moves.
Yes. And fast moves. The thing is, if you look at this on the way up, it behaved really, really well. We came back to retest the 72 level. We came back to retest the 108 level. And now we stopped at the 144 exactly, came back. So it's moving really well in between the square, between all the levels, and it wouldn't be out of reason to go back and tap 144 at lower high or even pick up a little bit, get everybody aboard, and then swing the other way.
Right.
So that's kind of what's happening. On getting back to let's look at the Dow really quick. What happened here was, we looked at that 90 and we saw the higher lows, saw the little triangle. It started breaking to the upside versus the downside. So, obviously a counter trend would be normal. So it's still ongoing. And again, we're just at this point, a reversal would be a good sign. So far, we haven't had one. So let's see how much further we can go. And I'll do the rest of the work on the ES. I think it's just easier because we're working on that off the chart. And coming back to our regular familiar chart, we got through the 1 by 1, we got through the 1 by 2. So what's the deal here? Well, what the deal is, we have the square 144 right above, and that will be right around 52.77. So that will be a really clean target. And the thing with charts is, we can go one tick below the old high, and then that's still a lower high, technically. So if we look at it that way, we have a lot of room to move around. But the easy low-hanging fruit levels got taken out. ABCD would have been perfect. We got that taken out. And I'm sure there's a 618 here. I'm sure that's probably going to get taken out. Then there's a 78%. So if you take the fib route, there's all kinds of levels. But here, what's working for us are these levels. And we talked about last week, it was 5104. We talked about, if we can hold above that, we're probably going to go up and visit 5200. And then we got a couple of targets last week from the ABCs, and we built up this little zone between 52 and 5232. And Thursday, Friday, we got on top of that. So, that's just a really good sign of strength. So we have to kind of back off and say, you know what? Long as it's about 5200, it's in pretty good shape. And we're that close, might as well go up and tap the 5277 level, if not the 5300. So I think the thing to do now is to wait for the market to sort of, show its hand.
Mm-hmm.
What do you think about that? Anything to add?
I agree with you. I think we are in a spot where the cycles and the times, I see your numbers there. I've got 90s, 30s, high to high, 144 from the recent October low, 360 from the December 22 low. There's tons of time in here. So, whether we go up and make that higher high and false break, or whether we, roll over and a lower high, there's some timing here that has to be dealt with. The
Yeah.
question for us is we have to try and figure out as soon as possible how is the market going to deal with these cycles.
Mhm.
You
Well,
know?
the thing with time cycles, yeah, there are some time, and we had a lot of cycles, like weekly, monthly level cycles coming
Yeah.
up, in March. So we'll have to see. Obviously that something clicked there. That's, then we got the correction. Now we're on the counter trend, and we just have to wait and see what kind of clues that we get, because we want to trade the swing, and we don't want to get in front of it too early.
No.
Now, after we tap the 50%, so all the pullbacks we've been good on, especially on the 30-minute, on a day-to-day basis, we follow that. And speaking of that, actually, so here's the 30, and this thing's what sort of keeps us sane.
Right.
Because we get a very short-term confirmation for everything.
Yeah.
So last week, where did we start? About the 6th. So, we had that 5104 we talked about. I think we talked about it last Friday, holding above that would be good. And
Right.
we held above that, and you see what happened. We held above, shot up, came back to 5127, and then got through the 5150. You can see we held above that, broke through 5162, that zone. You can see how it held above. There's a lot of air under it, very strong. Got on top of the 5195, which is a 50% level. Tapped here's our Gartley target, 5227, I think. We tapped that. And we came back to test the 5195, which is the 50% of the square here.
Held nicely.
Yeah, held nicely. Got the low. We had sort of a flush. Then we had the higher low. And all through these every morning, I'm saying, hey, if this is held, it's probably going to go higher. So it kept going higher. And today, well, this was yesterday. We were looking for it to go up and test up in this area, which it did, and ended up settling about 52.39. And so the story today was, hey, long as we can hold above 52.39, this market's extremely strong. So, let it correct and back and fill and do what it has to do. On the other hand, as long as it's above 52.10, it still is in a very, firm position. So it's doing okay. If this was going to turn down at a lower high, this was a really good level to do it, 52.39. We didn't quite do it last night. We didn't do it this morning. We kind of corrected into it off of that false break. And now we're sort of grinding, we're grinding back up into well above 42.39. All right. So that tells us it's not ready yet. So, far as the time cycles go, you can see how we have cycles every so often. If it's 90, we're every 90 bars. So it doesn't mean the next set is the one.
Is it?
Yeah, it doesn't mean that's it. But it's a potential, right? It's a potential.
You pay attention. You
definitely pay attention. So the whole lesson there is you want to wait for price time, and you want to see what the market structure and the pattern is telling you, and that's where the clue is. And from what I just got done talking about, the market is showing that it's very, very strong, and it's not turning down at the normal places where it should, or let's say the high probability places where it would turn if a lower high or the counter trend was to terminate on this leg, where it's going to terminate. So there are places to do it. And so the next place really is this 52.77 area, which is 144. It makes sense. And if you get all the way up to the 16th, now we're 144 days out and 144 up. So there's a square here.
That's a nice spot.
It's a very good square. Now, the thing is, we kind of squared out and squirreled around up here, kind of like upside down what happened in the bonds. Bonds went down below the square a little bit, came back
that's
up,
correct.
and then it hit the square on the money. and now it's going
Reversed.
reversed. So it could be something like that, since it's sort of the season. I mean, it happened in bonds. Sometimes, other markets might lead in a certain pattern and it might be picked up by others. So it's possible. So far as the whole puzzle of, where is it going, I would think this 52.77 area would be sort of the last level to watch. And long as we're above 5,200, it's in very good shape, basis the daily chart. So we're okay there. And if we get above that, then we have 53.10 and a potential false break. So that's really sort of what's left in the books.
Yeah, this morning on X, when I posted my morning ES analysis, I said bullish, but on alert.
Yes, for sure. That's exactly what the post should be. Something like that.
Right.
Because that's exactly what and bullish thing, just to pick it up. I mean, these are 1x1s. Look how far it is from the 1x1. Look at that. Look at that push coming off this correction.
Sure.
And the same thing on the takeoff. We had so much push up and away, and just really stayed above the 1x1 really well. And now it's the same thing. Now we're above the 1x1 really well. I mean, well off the average down here. And it's almost as if, coming off this low and we're over here, it's about the same distance.
Sure.
So it's very strong, and you don't want to mess with that, but you do want to watch where the price and times are coming in, and if the market sort of shows a sign that it did terminate. So far we haven't really got one. We kind of almost got one here because we had a reversal off that high, but it didn't follow through. The pattern, they bought it up towards the end of the day, and so that didn't work out. So we're just watching for now, and we have these levels, and they're taking out levels sort of, if you take it from here, our main levels off the daily is taking up like 1,000 clicks at a time. So so that's a lot of power, right? A lot of force, a lot of billions on the order desk. So let's see how that all terminates. You can see the long legs got a little bit shorter. We had really wide ranging bars starting off of it, and now it's getting a little bit narrower. And I think 52.77, that's really the next termination. If we get above that, then we're going to have to go for a false break. And I'm still going with the probability of a high being in place. I mean, clearly we've had it, the market was able to hold the high for a while, right? Over 30 days.
Mm-hmm.
So something did happen. I mean, why wouldn't it just correct for 3 days and just run up again?
Correct.
So something did happen. What we want to know at this point is, was that it? Or is there a larger one? Because if we stop here, the reason for all this, even our focus about the lower high, is because that's, like Ben always calls it, that's a fat pitch.
Yep.
Because if we can actually get that and it works out, it's a huge trade, and there could be, big risk reward.
Oh, the risk reward is tremendous when you can capture those.
So, and you don't get them all the time, just like a good pitch. So you want to, when you see one coming, you really want to watch it. And that's all we're doing here. It's not it's not for any other reason other than, hey, there's a good shot here. Let's watch it carefully. And if we can catch it, it's huge. It's huge. So that's the idea. And for some reason, we end up settling above this 52.77, and we grind through 53.10, and it's not a false break. Well, that's just fine, because that'll just open up to 55.60.
Yeah.
That's our next leg, right?
Keep going.
Yeah, you keep going. Once we clear these levels, we're on board again with whatever direction. Like once it held here, we were on board for a correction. Fine, no problem. Once we cleared there, we're on board for the next level.
Yep.
So we go, if it's your first time, we kind of go square by square. It keeps things simple, and using the squares as an overlay, right? But we still look at the market structure and patterns to tell us what's happening.
The image I had when you were explaining about the fat pitch and why we're so focused on it. Those old videos they have where you see all the surfers, sitting on their boards in the water, and these massive waves start coming, and they all get ready to go, and they're all scrambling trying to catch it. That's what we're doing. And we see that, hey, this wave coming up is a potential huge one. So we got to get ready. Be ready on your board. You can't be, screwing around, paddling, swimming, splashing. You got to be focused when that big boy rolls in.
Exactly. And that's all it is. And in the meantime, we're not fighting the tape. We're just kind of going with it, because it's just very clear just from the trend and the pattern that the market's very strong. So, I mean, the first sign was it taken out. I mean, getting to the ABCD that we had target up here was fine. That's expected, right?
Right.
Now, when it takes it out like we done Thursday, then you had to step back and say, all right, you have more gas. All right, let's see. You know, let it go, and we'll wait for the next spot. Let's go to the weekly, because I think the weekly will show us a little bit more of what might be happening. So on the
Right,
week,
right at the half square, huh?
it's right at the half square, man. You know, it's 42, 52, 48 is what I had up here, and we're just right there.
Yeah.
So I'm keeping the ABCD because that was a pretty good termination, and in the big picture, yeah. So we get 3 bar counter trend. Fine. So basis weekly, what would confirm this high would be to have a reversal up here. So if next week at some point we take out this week's low, well, that would actually signal a big old. It's a pretty big reversal, because we're talking basis weekly, right? And another place where we had pretty much, let me zoom in a little bit. We talk about these things, and often they're not just technical stuff, because I want to show you what happened here. We went into a high up here back in July. We correct, we off that high, we sold off for 3 weeks. And then what happened? We had 1, 2, and the third week was up technically, right? But the bar was sort of starting to lose it. And the next week, the fourth bar was a reversal, right? We
Outside
reversed,
reversal, yep.
not a reversal bar, but a reverse. And then the following week, 1, 2, 3 down, 1 up, and then 2 down. And that was a big trade. So if we can catch that up here early enough, here's the trade that you can have, which was okay. It's better than stick in the eye, right? So any kind of a counter trend, that's what we're looking for. And here's another one. We came down on the first leg, great. Here's a counter trend, 1, 2, 3 weeks up, reversal, right? Boom, 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 boom. There you go. Get 2 legs to the downside, and 1 more up here. So same thing. So this 3 weeks up is something you really want to watch, with the fourth week reversing potentially. And because that's what we have. I showed you guys 2 examples, and here's another one. So we got 1, 2, 3. What happens next week? Are we gonna have a fourth going straight up, and then we probably take out the high? But if we somehow have a reverse bar next week, or actual reversal, taking, not making a new high, but taking out the low of this week. So that's how that would set up. And on a basis weekly, the probabilities are it's going to give us a new low for this swing. Just how things work. So we'll watch that. And this is another reason. So it's kind of tying in from 2 places. And that's the reason. Going back to the 30-minute, if you guys aren't following us, follow us on Twitter, and I post it 30-minute every day. And Ben's posting stuff all day long for all the commodities and everything he covers. And so for next week, this 52.39 really is the deal. We're 90 degrees down from the high. That's what that level is. And if we can manage to stay above, I guarantee we're going to go on higher and test those other areas, the 77 level that we looked at. And here we have this 52.86 to 53, that zone. And if we somehow get under 52.39, then 52.10 is at risk. You can see how much time we spent there. So if we take that out, slip through the 51.9, right in here, it's very suspect. and it's very low risk entries to see if it starts to reverse, but we have to be careful, because as long as above 52.10, it is strong. And if we can manage to be above 52.39, it's extremely strong. So you just want to actually play with on that side. And 52.86 would be the level to watch for next week. Yeah. Anything you want to add to any of that?
No, I think that's really good coverage, and it's diligently watching price action and levels now to see, what scenario is going to take effect.
Yeah. And, at the end of the day, it's all probabilities, right? So what's the probability of this over the other thing? And here it's the same thing. I mean, there's still a high probability the high is in place, and we're going for some kind of a lower high or a false break. And that's still in the cards until it's not, because the probabilities are that this high is a significant one. why do we say that? Well, because of the weekly counts and the daily, and also the monthly setup that we talked about a couple of shows back. So because of all that, we just can't all of a sudden automatically have amnesia. We have to remember what's happening in this whole, the entire pattern up until it's invalidated. Then we go with that. Enough for
That's
the
good
yeah.
coverage on
No.
E-mini. Yep.
Great. Thanks. And if you guys like our work, please subscribe and like our work and share with your friends, which is great.
Bonds are kind of doing what we thought. Little rally attempt and
Bonds are
showing
doing exactly what we thought.
not going down anymore. That's the key.
Yeah, well, yeah. So we had this 45 by 90, sort of we moved an ABCD right into that. Yeah, and that's pretty, that's why I said we probably don't want to be short in here because you're going to catch some heat. And we did move higher, good enough. So let's see. I think bonds, it's pretty much the same story, long as we're above the 50% of the square, which is really about 14 and a half, 14, 14, 14, yeah, 14 and a half. The square low is holding.
Mm-hmm.
And we have to let it breathe and adjust, see what we have to do. And I mean, little ABCD up correction would be beautiful at this point. Of course, our plan B is if the low gets taken out, then obviously this thing's going back down, new lows. So that's what's on the other side. So
it's fascinating to watch too, how bonds and the equities and the dollar are all sort of, playing in with each other. And then you throw commodities in it. You can see where the money's sloshing around in between these asset classes.
And if you add the equilibrium lines, bonds have plenty of room to come down and test this. So it's not like it's lost anything. Yeah, that's kind of it for the daily. We didn't have this Gartley on here last week, but I was going through stuff and I thought better to just put it on instead of just talk about it. So it's just there, and we can take this out at some point. I just wanted to show you guys how often they come in. Let's move on to the weekly. Now the weekly is where I wanted to show you guys this square. It's kind of, sort of a fractal of what's happening in the S&P. We're talking about that 145, 4 by 144.
Inverted though, on the upside.
Yeah, on the upside. And so it'll be like here. But the S&P kind of made a high prior to that at the 108 level. So anyway, but the same thing happened here, and if we take out so you see we had 2 weeks coming off of that low. And I talked about that, last couple of 3 weeks, I think, it's a little suspicious because we did have the price level get taken out, but it wouldn't be the first time I've seen something like this where the price gets ahead of time and then it comes back and balances out at the square, miraculously. So
sure.
So, and we have 114 here. We talked about 114 and a half on the daily and 114 here. Basis the weekly. Yeah, fine. Let's see. So why are we talking about these squares? The basic idea is that price and time balanced, and it's probably going to counter trend, and let's allow it to finish the counter trend and get back on the downside. And the counter trend being, I'm not really sure if it's a tradable big one. So we're not getting all bullied up on the bonds yet. So
right.
Might be a while for that, but yeah, that's it for the weekly. Anything you want to add, or we're good?
No, that's good.
Okay, let's move on to crude. So
crude is sleeping.
Crude is resting, Crude's gone through a lot, probably traumatized.
Yeah.
So crude is totally traumatized and it's kind of resting. Okay, so we did, we had that ABCD drawn up last week. It did hold. We did kind of a little bit of a false break type of thing and rally back up. Okay, fine. So we're holding up in this level. Anything above 75, it's fine. It's in very good firm territory. It's not in a weak sell-off kind of a territory. But if we lose 75, 73, then we open up about 10 points going down into 64, 75, $65 down here. So I really don't see it in the cards, but hey, we're technical people, so we'll play by this. So we're between 73 and 83 now, and we're right smack in the middle of that, around 78. We'll see how he plays out. So for now, let it correct and rest and see which way it wants to drift. If it's going to move higher from the ABCD target, well, I think that's positive, and then 83 becomes resistance, and that would be the target. Once you get above that, we can deal with the rest of it. For now, it's a little bit in consolidation mode. Goes without saying. Okay.
That's a good summary.
All right. Thanks. So we have the weekly. It's kind of the same thing, as long as we're in this quarter square, which is what the green is, and the dotted lines are the eighths.
Mm-hmm.
It's it's a good area to consolidate. It's sort of neutral. It's not at the lower end of the spectrum, and it's not at the higher end of the spectrum, right?
Mm-hmm.
We're smack in the middle of it. And if you take this half square, we're pretty much just below half of that, which would be a quarter. And that's why I box it up. And we do have this triangle that's starting to show up.
Mm-hmm.
And yeah, so that's going to be something we got to watch. If this thing breaks to the upside, that's just going to be wild. And if it breaks to the downside, it'll still be wild because nobody's expecting that. so
Well, it reminds me of the old adage. What did they say? Never short a dull market.
That's for sure. Yep.
And that's what this feels like. Like it's dull. Nobody's talking about it. Nobody's interested. Almost like copper was for the months before it took off.
Exactly.
So let's see.
So yeah, that's it for crude. We're sort of, and I'll give you guys a range for that. So the upper boundary is really 88, and the lower boundary is 73. So there you go. That's our level on the daily also. Let's move on to gold. Not much to say. I think the 1/3 of the square area held on this. The square looks good, and this is a little bit like the S&P, right? Like did you square out, and what happens next? So
right.
We made the high, did a little ABCD down, like okay, counter trend. What's going to happen? Are we going to make a lower high and then trade lower? Or are we going to somehow get on top of the 144? So here in this case, it'd be 2404. Whereas the S&P was at 5277, right? So that's the thing. Let's watch this. 2404 is the level. And I think the big run was that here. It's going to be a little bit risky to do anything. We're just waiting to see, if we have a lower high coming in, or if it's setting up in some other way, or if it's going to consolidate. It would make sense for it to consolidate up here,
right.
Really put in a good floor for future movement, like we did here.
Yep.
We broke in hard, ABCD, and look what we did. And we put about a 2-3 month consolidation, right?
Yeah.
So something like that wouldn't surprise me, and it'll be very bullish and positive for the gold.
Absolutely.
Gold traders. Yeah, it's good. Next, we get on to the weekly. Weekly gold is looking extremely bullish, and it's holding this 2x1. It's very strong. So we had, without counting the inside bar, we had 2 weeks down, and we have a counter trend this week. It's looking more and more like we're going to consolidate. So we're going to allow it to do that, and we'll pick it up on the next week, see what happens. Anything exciting happens. But it did its part, right? And it did it well. Gave us a nice run up.
Yes, it did.
Yeah. And guess what? Gave us a good run up. I mean,
this one, yeah.
Here's copper. Here's that sleeper we were talking about,
Yeah, just put everybody to sleep.
Nothing's working, and boom, all of a sudden, copper's in demand. And last week we left off saying that long it is about this 426, the 72 degrees above that, really the pool is towards this 482, 483 area. And looks like we're in good shape moving towards that. I don't see any problem, because even if it corrects, it's got plenty of room to correct and still be very bullish, because we got this huge base here.
Yep.
So this is not a market that you want to be selling with both hands, or even with one hand. So here's the reason for the pause. We did have an ABCD. We actually, last week we were saying, hey, this is kind of close enough for government business. And what happened this week? We went and tapped it, right?
Yeah.
And so I'm thinking, yeah, that's good. Let it tap, let it finish up whatever it's doing. And long as it can hold about this 455 area, it's very, very bullish. And this week, majority of the time, we were up above that. So the question is, if we're going to just consolidate for a couple of weeks and move, or are we going to have a bigger pullback, maybe down into this 435 level?
Mm-hmm.
So either way, we're bullish. After like a really steep run like this, we're a little bit skittish to jump right back on at a square and a termination of an A, B, C, D. So,
Right.
we're gonna give it a little bit of time to settle down and give us a good low risk entry.
Exactly.
Getting on to the dollar, with the 1/3 of the square is these are the green lines held. So we're really kind of boxed in between the 50% of the square at 106 and 1/3, 104.87, 105 level, right? So 105 we talked about last week being, if we can hold above that is very positive. And so far it's holding above it. And like I said, even if we come down come down to, let's say, next week, 104, it's still above the trend line. This did square out. So the question is, how much of a correction are we going to get? Or is it more of a consolidation? So if it's above 105 consolidating, it looks, it's very bullish and strong and good. So let it go ahead and do that.
Yep. Let it finish up.
It's really important to remember and get used to, jumping on the impulses and the move, and then staying away when the market's readjusting or breathing, having a breath, not to be in there every second of the day.
Mm-hmm.
Well, the reason for we had a square, then we also had this ABCD terminating here. And so far it looks like it's a decent, nice, tight, very bullish sort of a correction. So we'll let it be that. Like I said, as long as we're above 105, we're in really good shape. We don't have to worry about anything. Then we have the euro still below 108, as long as and it's kind of consolidating under it. I have really nothing to add to this. I'm not going to get long up here. It's 108, and we'll have to see if it's going to get above or if it's going to drift off. And looking at both of them, dollar putting a low around the 105 area, and then the euro hitting the 108. So those are the sort of the 2 points. As long as we're next to it, not taking them out, we just have to wait because it's too close to the collar to do anything. And let's go to the weekly. Take a look at that. See what's happening. Well, pretty much the same story. I don't know if you guys remember, but we talked about this 108 being sort of the pivot level, and if we get under that, we're going to be weak. And we got under it and really, sold off. And now we came back to tap it, and we've been under it ever since. Not much to do. It's one of those things, if you guys have noticed, when we get to our levels, we kind of pause to see which way it's going to take coming off these levels. So we're going to try to watch this. If it's to the downside, fine, then we have a leg there. If it's to the upside, fine, then we'll have to trade it as it comes. Either way, what we do have going is a big triangle here also. You saw the one in bonds. Now we have one in the euro. This is on the weekly basis, so it's kind of a big deal. And we'll continue to watch it. Anything you want to add here?
Nothing. Just that it until it is done winding up, it's probably just chop city.
Exactly. And that would lend towards, the dollar consolidating, right?
Mm-hmm.
That level. Let's see what else I have here. We got the, you're going to cover natural gas this week?
Yeah. Your Hang Seng had a huge week.
Yeah. Natural gas, basically, with that 153 level held finally, right?
Perfect.
It's
Yeah.
kind of a big deal, 135
Big deal.
down. So, let's see if the bottoming action is here. We do have some overhead, but you're going to cover all that.
Yep.
Hang Seng did perfectly. And the best part, was how this 1854 was the level, and look at the force it took to break through that.
It gapped over it.
Mm-hmm. And often, yeah, go ahead.
No, say gapped over your full square, and there you go.
Mm-hmm. And often you'll see that, when you come up to like a big resistance and support level, it takes some kind of extra force to get through, and usually some kind of a spike or news would come in right then to break it out.
Man, people go back to the January show. Barry called this in real time. When you saw that, you said I think the low is in. And that was like January, February. You called it.
Yeah, it was in January. Yeah. Yeah, low came in really, and we kept confirming it because the price action was okay. It just kept moving well, and we had the sort of the false break scenario here, and then here's the bolt.
Yep.
And the other thing to watch is, if you guys are watching the squares and things, is after we broke out, look how much air we had between the lows and the actual
full square
resistance level. Yeah, full square was 1854. But when you have a lot of air like that, and we have like the the bars getting really bought up the day before, you can expect some kind of continuation. So
Mhm.
so we look good up until about 20. I'll do some work on this. The thing is, we want to go off. If you go off of this low, we can see how we cleared the 50% of the square. So we're moving higher.
Mhm.
And if we go off the low in January,
Still got some room.
yeah, we did well. Quarters held right above this quarter square,
Mhm.
and it'll be 19,444, let's say, to keep it easy to remember. 19,444 would be
Mhm.
the 72 degrees up, and looks like we should get there. So
Mhm.
that's it for me. I know you got a lot of commodity stuff to cover and a lot of opportunities, so we all want to get on that train, that grain train.
The
So
grain trade.
let
Yeah.
me put it back to you.
Okay.
All right. Oh, another ABCD about to get dismantled, maybe, maybe.
Yeah, here's your NQs. We did complete the ABCD this week.
Hmm.
Interestingly, right, we had this sell-off, right? We made
Hmm.
the high on the half square, had this sell-off to the other half square. So we went down a full square,
Hmm.
came up, tested the full square, failed. So this looked like the rollover here, and it could have been, right? This
Oh,
is,
perfect, because the high was the 50% of the move. So,
yeah, it was 50% of the move under the full square. You roll over. This is a fat pitch, right?
yeah,
Doesn't always go out of the park though. Had a
yeah.
good move,
You got to
made
swing.
a, yeah, you have to swing here. You have, because it's probabilities, right?
Hmm.
So we came down, made a higher low, and now we've pushed up and we've completed the ABCD.
Hmm.
So much like in the ES, we're trying to figure, okay, are we going to roll over from here? Is this it? Are we going to be able to push up here, challenge this half square, false break, or get above it and sit on top and just keep going? And that's what we're trying to isolate, not only in this market, but in the ES and in any of the other markets that we follow. Let's take a look. There's not a lot else to say. Anything else to add on the daily before I go to the weekly and
No, we're
monthly?
good. They're all kind of doing the same pattern, probably because of the same capital, same
Mm,
capital flows.
right, right,
So
right.
yeah, we'll watch it all.
Okay. So let's look at the weekly. So the weekly is interesting in that we're getting gonna get a weekly close because it's 4 o'clock now. We're gonna get a weekly close over the full square, but the whole bar is not. It's almost like straddling it perfectly, right? With just the
Mhm.
same length below is the same length above, and that's the 90. So we've got a real big decision to make here. Again, are we gonna next week, are we gonna be able to have the lows stay above this full square level, which is, call it 18,195? If we can stay above that and push, we should be able to take out these highs, to make a new all-time high.
Mhm.
If not, if we get stuck under, if we start failing, then this is your lower high that you want to take a swing at. And again, this is on a weekly basis. As Barry was saying in the S&P, yeah, or well, I forget which market you were saying had the three up bars. Here we've had three inside bars.
Mm.
It's all this action has been inside since that big down bar.
Right.
So we'll watch and see. Your little trick worked really well though. Once, you had an inside bar, when the higher low gets taken out, you pick that direction and that would have got you in here,
Mhm.
which is nice. So we need more information. We got to watch and see, how this is going to resolve at these key levels. Let's go to the monthly. Monthly's a different story, right?
Mhm.
There's a lot of work to be done here. So we had this down month. The high came right in at full square resistance, which in this case is a 108,
Mhm.
with 180 in time from the '09 lows. I mean, that's big.
Mhm.
We got a 60 that was a couple months earlier. We got a 45, same thing. 18, 18 months from that 2022 low in October. A lot of timing here on a monthly basis.
Yeah.
So we'll watch. We're working on a inside bar so far. So we'll see. Can we take out the top of this and have a reversal, or do we just chop around in here and burn off more time. It's a little more, just like in the ES, it's a little more ominous when you go out, on a monthly, weekly type basis and look.
Mhm.
Anything else to add on ES, either weekly or monthly?
Yes, Nasdaq, kind of the same story. I think we just have to see what happens. Next week's kind of a pivotal week because the fact that we took out the targets, now we're waiting to see if it's, we're going to go much higher, or we're going to turn, or what the story is. So,
Yeah, next week's big. Yep. It'll tell us a lot. It'll be
yeah.
another data point that'll go a long way towards helping us
Mm-hmm.
figure out which side is more probable. Let's jump over to Bitcoin. Last week when we were talking about Bitcoin, we were talking about how important this full square was.
And now we see.
And now you see why.
Mm-hmm.
We attacked it on, what's the date there? On the 6th,
Mm-hmm. Monday.
failed.
Yeah.
Yep, and we failed. Now we've come down, and the low today so far is holding the half square.
Mm-hmm.
So there are your two key points right now. Watch, and all these levels are on the Google Doc spreadsheet that we post the link to each week. So
Mm-hmm.
um, to the downside, it's this 60,370, and to the upside, it's 64,865. Those are your areas. Otherwise, we're just chopping in here. The risk, the longer we stay below these levels, the more chance it could roll over. Uh, support, if you look, there's a little support here when we did this sideways pattern, which is around 53, 52,000. And then there's more support here down around 49. So if we slip through here and lose this full square, this is where we're heading. On the other hand, on the bullish side, if we can get above and sit on top of this full square, then you could say the correction's over and it's ready to go again. So we'll watch it and see.
Mm-hmm.
Anything else to add on Bitcoin?
Oh, we're good. Watch that 59,624 level, because that's going to be really important if we get
Yes.
stuck under that.
Yes, it is. It opens up a whole nother square downside, essentially.
Right.
We've been talking about the grain train on X during the week, and people asking about it, people noticing it, and they're saying, "Oh, the floods are in." I think there's floods in Brazil, and there's bad weather in Russia, and that's got the grains a little bit excited in wheat. The thing that I want to point out is, okay, the news is coming out here,
Mm-hmm.
but the pattern started here,
Exactly.
right? 2, 3 weeks, a month before. And this is when we picked up on it, right? Because we had the low, which if you go back and you check previous low shows, we were tracking this low in. We had an ABCD down into this low. We got the first push up, a higher low on the pullback. When we made this higher high and broke above the full square, this is when we said we got to watch this. It's time.
Mm-hmm.
And here we go. Now, this week, made another higher low. So well above this basing pattern that we saw at the low. And now we pushed and made another high, paused at the full square, pulled back, and made another higher high and a higher low.
Mm-hmm.
So wheat is the best of the three. It's in the lead right now, and it's sort of leading the others out of the woods and out of the wilderness here of finding these lows. But as you can see, it's why we don't trade off news. It's why we trade off the charts and the patterns and the geometry and the price structure and the timing cycles. We try and do that because this is where we got involved. And if you're waiting for the news, your risk reward profile is a lot different.
Yep.
So I think it's a good example. And so the daily here looks really good. Let's look at the weekly. Wanted to show you the weekly. We had, this slow grind out, and then we had one big bar, and then all we got was an inside bar, and now we got another bar.
Mm-hmm.
And what do you like, Barry, when you see that? That's a really strong market,
That's
right?
right.
When all you can get is an inside bar, and then you go again, whether it's up or down, that's a strong market.
Yeah. Following that triangle breakout. So
That's right. The level to watch coming up is this full square, which is about 681. We should see a little bit of resistance there. We're going to watch and see how it handles that. If we can blow through it and then sit on top, then this whole structure is confirmed as a low, and we're ready to go sort of with the next phase. So the weekly still looks good. It's coming along. And you can, when you see the different time frames, you can see how they develop, right? The daily is further along, the weekly's coming out nicely. Now let's look at the monthly. And look what the monthly did this week. Monthly made a higher high. Haven't seen that since this uptrend.
That's good. Looks good.
That's really important, right? We made this higher high this month. Because
Yeah.
here, when we were coming down, we were making lows, high, lower low, lower high, lower low, lower high, lower low, lower high. Now we've got a lower low, and now we've got a higher high.
That train's starting to leave the station there.
That's correct. The monthly is starting to roll here. And look at this. Back in 2008, took 28 months to get high to low. This time we did 26. So we're right in there cycle wise as well.
Yep. Yep.
So monthly's looking good. It's shaping up. The weekly's kicking in. The daily's full on. It's the type of market you want to be involved with. Anything add here on any of these time frames you want me to flip to?
No, good coverage. This is it.
Yeah, it's going. Let's look at the other two.
We should have some like bells ringing in the background, like old DJs, like because we kind of talked through the whole thing very calmly. I don't know if people get like, hey, this is really happening, right?
when you get the monthlies kicking in to join you, that's when you get the. I mean, go look at what happened with cocoa. Yeah. That's not saying that it's going to do a cocoa, but that's the power that gets generated when you got a monthly, a weekly, and a daily all pushing in the same direction.
Exactly.
And that's what's happening in wheat. And now let's look at the other two and see where they are in their stage. Here's corn. So what did we get this week? Again, the low came in off of an ABCD. We're starting to see, and the other thing you notice, which I didn't highlight on wheat, but it's certainly doing, is that you'll start capturing half squares and full squares on the chart. And here we've captured a half square, right? We had that higher low pull back, push up, another higher low, and a reversal today.
Right.
We're starting to pierce these downtrend lines. This one I think is all the way from the Russian invasion highs in 22. Yep. And this one from the early 23 highs a year ago. So we're just starting to push through these things, and this is when momentum starts kicking in. And that's the daily. Now let's go check the weekly. So weekly's breaking a downtrend line. You've seen a nice little 1, 2, 3, 4 week higher highs on corn. But this week gave us another up bar, and we broke the downtrend line with a full bar. So that's looking good. Higher low, higher high on a weekly basis. Now let's look at the monthly. It's going to be lagging a little bit, but this is how it starts. Low coming in on timing. This was 22 months high to low. This one here I measured was 15. But look at the timing on that one, right on the half square.
Yeah.
Inside bar, and now we've got two months up. May's working on another strong up month. You can see it's not as developed as wheat, but it's coming. It's coming along, and it's pushing just like these. They trade together. One of them's lead. One of them's the engine. One of them's the caboose. This is kind of one of the middle cars, and we'll look at soybeans next. That's the caboose, but it's coming along too. Anything to add on corn?
We're good.
Okay.
Everybody knows now.
Yeah. It's like you said, once we triangulate the swing, the swing point, whether it's the low or the high, and then we start watching it, it's not a lot to say other than you're just looking for, is the evidence continuing to build, right? Is it doing the things it needs to do to, continue higher or continue lower, depending on the pattern.
Yeah.
Here's beans. So beans on the daily, ABCD into the low, first higher low here, second higher low there. There's your higher high. What's interesting this time is we're pulling back And I want to see us, if as long as we can sit on top of this, and in this case, it's that harmonic balance point,
Mm-hmm.
and keep pushing off this and get on top of that full square. That's perfect, perfect structure for the daily. It's not air, it's not making air, but it's pulling back to the area of the previous highs. And this one is the laggard. And again, just like corn, it's dealing with the downtrend lines from the Russian invasion highs and then the highs last summer. But it's doing what it needs to do to push off and really get going in a bullish train. Let's look at the weekly. So the weekly has a higher high and a higher low. Still has a downtrend line to deal with. This is the big level here on the weekly, around 1282. And if we can clear 1282, then we're back above into all this, right? And we're above this whole correction for the last, year and a half.
Mm-hmm.
So that's the key level, getting above that full square. And then the monthly hasn't broken the downtrend line yet. We've gotten our first up bar so far this month. As long as price stays, we don't make a new low, we'll have an up bar, and that's a reversal. And you can see this one's the laggard. It's behind the others. But remember where the lows came in, right?
Yep.
Sitting on top of this whole structure.
Looks very good. Very bullish.
So that's beans. Anything else to add on beans?
Well, it looks very bullish. I mean, it's just perfect. If we can just break that trend line, then we have a good monthly confirmation.
That's right. The monthly will kick in, and that's when you see the momentum. All right, let's go to a different kind of bean, coffee beans. And coffee's, it's not ready to move yet off this correction, but I wanted to show this to you because I think this is really important from a structure standpoint, as well as a little geometry in here. So we triangulated the lows here last year. First push up, pull back, and then the sharp move higher. And we've since had a full square correction, right? We made the high here on this square, and we've pulled right back to where the lows were on the 90, which is an important spot to have your lows, by the way. But look left and look at where the lows came in on top of all of this. And you'll see it even further back how important this level is when we go up to the other time frames in coffee. So the last 2 days we reversed up. I wouldn't be surprised to chop around some more in here. I don't think it's a takeoff from here. So let's see if we can get a higher low structure and then a higher high, and then we know we're ready to go. But I thought the lows were significant enough to highlight them, and you'll see why. Let's look at the weekly. So this whole structure here, we pulled back to. As long as we can hold above this full square, call it around 194, 195. This is very bullish for coffee. Let's take a quick jump to the monthly. What's the monthly doing? The monthly's holding the half square. And you can see why that half square is important. Essentially, if we hold this half square, other than this little deviation we had above it, we're above all the price action since around 2014, 2015. Anything you have to add on coffee?
The correction came into the right level. Everything held perfectly. So so far it's textbook.
Right.
For a volatile, commodity like coffee.
Yeah, I mean, it's showing that it's still bullish, right? Even though we've had this pretty sharp move down, from this 230, 240 level all the way down to 200, it's still bullish.
Yep.
Now let's see the setup we can get on the daily to allow the weekly, monthly to kick in and really get this thing going. So that's coffee. Let's go check out another one we've been tracking that looks pretty good, and that's silver. This thing's been last week I highlighted it. Almost think of it like coffee, right? Did almost just about a full square correction, but right into an area where it needed to hold, right? A full square sitting on top of all of this. And then look at the reaction we got this week. Immediately went back, recaptured the half square, which is positive. Now we got to see, can it hold above this half square? If it does, we should make a new high.
Yep.
We should be able to push up and make a new high on silver. Let's look at the weekly. The weekly is important because it gives you a better picture of why this area of support was so important, right?
Yeah.
Highs in 23, highs in 20, 24, 23, 22. This whole structure here coming out of the pandemic. So, and we're closing another week over this, call it 2746, 2747 area, which is really important. If we can just chop around in here for a while and build a structure, that's huge.
Yeah. Which it looks like that's what it's looks like that's the plan.
It probably the plan until whatever event is going to kick off the next rally. But it looks good. Monthly, there's even more important view of that.
There's your breakout.
Yep. You break out from that level and now sitting on it. So are we going to need to chop around here? Maybe. Go sideways for a little while? Maybe. And then, that's just building the energy for the next push.
Just remember, we have an inside bar working so far.
That's correct. It's inside. And remember, as long as we stay on top of this, it opens up the full square. And that's the 90, which is up around $50. That would be the next move. Anything to add here on silver?
Well, I think the triangle is thing to watch, and looks like we're, breaking out in real time. So it's definitely, now we moved into the tradable side, right? We did that big consolidation. Looks like we're moving out of it. So
It's
now
done.
it's time to, yep,
It's time to trade the long side.
yep.
All right, let's do the last one, our favorite friend, the Widowmaker. And look at what this little thing is doing. Slowly crawling out of the primordial ooze, right?
Yep, yep.
Boring everybody to death here. And now look, we captured a half square. That's the first thing, right? First thing we did was hold the full square. Then we said, okay, now the next thing is we got to go up and test this half square. 1, 2, 3, 4 days, push through. Now this day, we're staying on top of it. We stay on top of this half square, then it's full square again. And that's key, right? That's going to be the key to tell us whether this is just a little trade here or we're talking about a monster move. Because if we can sit on top of that, opens up all kinds of squares. This one first, not a lot of resistance there, and then this one next. So one step at a time.
Yep.
And this is the first bullish step. Let's take a look at the weekly and the monthly just to give you the perspective on why we like this thing at the lows. There's your low structure, similar to this low structure, similar to this low structure. And we've been pushing too. Look, three nice up bars, 3 weeks.
And we called that out 3 weeks ago.
Yes.
Remember when we were looking at the monthly 3 weeks ago, we saw all that support down there. So
you mean like this?
Yep, right there.
That's when you saw and you go, oh my God, you got to buy it here.
Yeah. How can you, what are the odds?
2, 3, 4, going back to the early 90s, right? Mid 90s.
Yeah.
It was a value area. And we do have an up bar now. It's first up bar after 2 inside bars. So and hopefully you can see what, when we show you the monthlies, the weeklies, the dailies, how the progression goes. And I think, Barry, that's a good topic to end on today. I know we don't have a lot of time, but how do you incorporate in these different time frames? We talked about it a little bit, but I think spending more time on that's really important because it really is it's a process in watching how, first the daily shapes up, then the weekly, then the monthly. So how do you work that into your process? Like how do you do that? What's the mindset when you're looking at these different time frames? And I'll give you the screen if you need it. Because sometimes we can get the same picture from looking at different time frames, but other times we get very, very different pictures.
Yeah. So, I think it has to go down. You have to have an anchor. Otherwise, you're going to be all over the place. So if you have a daily, let's say we have daily, weekly, monthly. Commodities, we go off the daily mostly. So that's what I would call the anchor. Like the S&P, I go off the 30-minute quite a bit. So I have the 30-minute chart that I post. And then, then you have like a 4-hour and the daily, weekly to the upside. The thing is, depending on your anchor point, like where the time frame that you're trading, it's important not to get too far on either side of it. You know, you don't
Mhm.
want to be trading 1 minute and then be looking at 1 minute charts. That's really gonna, sort of screw things up.
You mean trading 1 minute and looking at monthly charts?
Yeah, you don't want to do that either.
Right, right,
Clearly, right?
right.
What if you were trading the 30-minute, we really want to look at the 30-minute because that's the chart that that's the chart you use. And then you use the daily, just like we're doing, when we're talking, we talked about, for example, when this low came in, I'm not trading the daily. Let's say I'm trading the 30 minutes, but that low is marked, on the 30-minute. We know long as that low is holding, I'm looking for the 30-minute to show me the kind of behavior that would look like it's moving higher. So what does that look like? It looks like it's holding support. The pullbacks are on support. It's moving in a structurally sort of sound way.
Mhm.
And then so the thing is not to get too involved with the higher time frames. I'm using 30-minute as an example. If I'm trading 30, you really want to stick with the 30 and the 4 because that's your swing. If you're trading the 30, that means you're taking the 30-minute swings, and when the 30-minute gets into resistance support, that's where you change your positions or get lightened up, whatever you have to do. So you can't use all the time frames all the time. So the way I look at it is if the higher time frame, let's take the daily just to keep it simple, came into support, we could take this low, for example.
Mhm.
From here on out, so that was on here. We could do a real example because I got the 30 here.
Right,
So this is April 19th, right? So let's
right.
go to
April 19th on your 30.
right. So can you see that? Okay.
Yep, yep.
Well, here's the 19th right there. And you can see how market came down and that was 360 down. I remember, oh yeah, this is the night we covered those puts, right?
Yep, when you and I were
So
talking real time. Yep.
yeah. And then we posted that that night. Why we were 360 down. There were other support levels, like on the daily we just saw. All right, so that's our starting point. Once we saw that on the daily, I leave the daily alone. Now I'm looking at the 30 and I'm looking to see, well, where is it showing me that, that is ready to move higher? So it's showing me with the higher lows.
Mm-hmm.
Yeah, I mean, that's the first thing. I remember this holding up over through Sunday, I think. Then we had false break. If you watch the false break reverse, so reverse point is right there. It should push higher because if this is holding, right? So let's say you're not quite sure, so you're looking for all the signs on the 30-minute. You trade up higher. Then we came down to 50-40. We have a line there. Held it there. Again, we're moving higher. So all these upswings you can trade with both your hands because that's the direction we're going. And once we hit some kind of resistance and we're starting to slide lower, well, then you back off. We know we don't want to sell and grab onto all kinds of shorts because it should be a correction because the daily held here.
Right.
And then that became a daily a higher low. We go off of that again. Then we came down lower again. We're making higher lows. So you're still on the upside.
So to summarize for them, basically you trade the time frame that you're trading, which is in this case the 30-minute, but you're using the higher time frame to give you sort of a weather vane to say, hey, the market's bullish, we support held, or the market's bearish, it made a high on the higher time frame.
Yeah, well, since I'm just taking example of what we do, since we kind of go off the swing pivot points, you want to wait for a pivot to come in, and then and there's always a pivot because wherever you are in the market, there's a history, and there was a higher low prior to that.
Right.
So we're going off, like in this case, the 30-minute. We're watching this. We were looking at that. We saw those big washouts, but we knew this had a lot of weight on it. So looking at that, you can see how the 1x1 held on that one of those. On the May 2nd, the pullback. And so we're still, we're watching the levels to the upside, but up until this reverses, we're kind of watching that low because that held. And we're waiting for the key level to trigger some kind of a pattern coming off of a high. So we haven't, we were watching it for 52. We were watching it at that ABCD termination. It wasn't there. So now now we talked about the 52.77 level. When it gets there and we reverse, so then I jump back to the 30 minutes. Say, okay, I have to assume that highs in, this high, swing high, lower highs in place.
In place, right?
And then I trade it. Now, the
Yeah.
beautiful thing about doing that is if something is not happening here correctly, you don't have to trade it. If we're not holding above, 5104 here and we're messing around down here, well, we're not buying it. You only buy it when it's setting up correctly and it's pivoting to the upside. And I think the key thing is not to get them all mixed up, and
Right.
to keep it simple. And the same thing can extend all the way out to the weekly. Of course, 30-minute and a weekly, it's already not that reliable because your horizon is so short,
Right.
So you want to keep that in mind. But just like the daily high came in, we had the pivot low come in on the weekly. So these 2 points did come in, and this high really came in.
Yeah.
So once that, we know the weekly high came in on the weekly charts, the daily came in on the daily, and they weren't just, casual pivots. This was like a big deal.
Yeah.
And so from there, you go back to the 30 minutes. Well, we're back to trading our time frame. Let me just go back a little bit.
Right. So it's using, in this case, it's using that higher time frame for a reference that you can then trade your preferred time frame with.
Yeah, you let you want to wait for turning points that are aligned with the higher time frames, because that really matters. That holds a lot of weight. Obviously, the monthly, more than weekly, and weekly more than daily. So once that come in, like this was one of those points where the weekly and the daily came in. So once that happens, when I'm on the 30-minute, I'm not worrying about, oh, should I be buying that? No.
Right.
I'm not trying to buy this. I'm not trying to buy any of these dips, because I know we have a lot of weight here. So the swing, the move is to the downside up until it's not. And every time it comes into some kind of a support level, we're watching it closely. And that's it. And the great thing about watching a downtrend on support is we're not looking to buy that. So it's not like we have to.
You're looking to cover whatever shorts you have.
Yeah. And because of
trade them. Right.
Exactly. So because it's down, we don't have to buy this.
Right.
We can wait to see, okay, when is it going to turn back down? Then you pick and choose your spots to get on the short side. And you can see it once it cleared out all the kind of sort of the weak hands by all this volatility, then the real move starts to come in, and it was very, 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 easy to take it down.
Yep.
Anyway,
that's nice.
I think that one of the key takeaways might be, if you want to give points, really keep your eyes on the chart you're trading, because that's really the important thing. And the higher time frames you can use for reference for when they hit their key support resistance levels, or I don't know if you guys are on indicators that, indicator turned, you can say it turned. Okay, now it's on the other side. The danger in all of this is going to a lower time frame, like if you're trading the 30, then you're messing around with the 4-minute or 5-minute, that can really distract you.
Yeah.
And I've done all these things. So I'm coming from, with wounds to show.
Exactly.
Stitches.
No, we paid our tuition on those for sure.
So these are just easy. You think, well, I'll get into a lower time frame so I can lower my risk and do all of this. Yeah, great, fine. You can lower your risk, but you're also, extending yourself into other types of risk, like psychology, for example. Then you get locked into that time frame. It's very confusing to go back to the 30. Then you have to remember the daily. Just you want to keep it really simple. Yep. And that works.
Great advice.
All right, good show, Ben. Thanks.
Thanks, Barry. Take care, everybody.
Talk to you later. Bye-bye.
Bye.